What a roller coaster the last month has been. 2 weeks ago, as you can see here, there was a nice high. You know, I asked for just this one great trading day and I got it. You know, I'll show you what went well and I'll show you, but clearly you can see things did not last long. I was at one point over $25,000, which was kind of not so much a goal, but it's a nice little milestone, right? That's a good feeling when you see your money grow. And clearly it's not staying in that direction. So what a month it has been. In this video, I'm gonna tell you what I've been buying, what has happened to some of the positions that I have, you know, how do I feel about that? Not always so great. And tell you what I'm planning on purchasing for the rest of the month. So let's get into that. Thanks for joining me. My name is Steve Coleman. I am a dividend stock investor, putting $150 every week into my tax-free savings account to earn some passive income, some investment income, because I'm still working for it, putting the money in, so it's not completely passive, but using dividend stocks to kind of grow some wealth. It's not without its ups and downs. So I'm going to begin this video telling you about some of the lows. So one of the biggest disappointments has been that Corus Entertainment has cut their dividend in half. I was looking forward to a nice, I think it was $160 for the year. So that was going to translate to almost $40 in dividend payments, I think in April. That really sucked. Obviously the dividend yield was really high. Even with it being cut in half, it's still over 6%, which is a good dividend yield. So with the dividend being at 14%, that was a little too high. The company was paying way too much out in dividends. They need to kind of hold back on some cash. A lot of Corus Entertainment's revenue comes from advertising. And what do people do in pending recessions? You know, they pull back their advertising dollars. So people are not spending as much on advertising, therefore hurting Corus Entertainment's bottom line. So they need to keep more of that profit, that cash flow, and invest more into the company to kind of make sure that once things start rolling again and people are advertising, that they're in a better position. So for the company, it makes perfect sense. As a dividend investor, yeah, it sucks. You're getting half of what you originally were going to get. The stock price went down significantly after that again. You know, I think it's around $1.60. So it's still low. I hesitate now, and this is kind of where that psychology comes into play, where it's like, I feel, I'm not impressed with the company. So it's like, why would I put more money into you? But yet the stock is very low, $1.60. I wish it was $160. This would be a totally different video if that was the case, but it's not. So I hesitate putting more money into it, even though now it is my lowest individual position. I have 51% unrealized gains now with Corus Entertainment. Again, it feels like I'm putting money into a stock that just really does not seem to want to improve in return on the stock value. So I hesitate putting some money into that. And I think that, you know, leave me a comment below, you know, what you think. Again, I really hesitate putting it in. Others have commented saying like, you know, why would you put money into that stock? You know, it's not going anywhere right now. I am investing long-term in Corus Entertainment. So if I just put more money into them now, you know, obviously it might pay off later. But again, I'm a little not impressed with them right now. But I understand from a business perspective, it makes total sense. So Corus Entertainment is one of the stories that just in the last 2 weeks, not really happy about, but it is a buying opportunity because again, I could average out my costs, but I'm not going to. The other big story in the last like 2 weeks would have been like Acon. Acon has skyrocketed to be like my #1 individual stock that I hold. It's now over the $2,000 mark of stocks that I own. So it's gone up to around like the $13 mark, where my average buying price at one point I think was around the $10 mark. So I've seen a nice significant increase in my unrealized gains with Acon, which I'm happy to see. And that's a good news story where when it was low, I did average down my costs quite a bit to kind of get it from maybe it was $11 down to 10. And now that it's kind of rebounding, it's like, wow, okay, things are improving. I'm seeing that growth that much faster because I did buy more stocks when it was significantly lower. So Acon is a good news story where, again, it's a good case scenario where average down your cost, and when things start to recover, your overall portfolio kind of recovers that much faster. Leave me a comment what you think about Acon. I would love to hear it as well. I really do love the comments I receive by everybody. I don't think I get a chance to respond to all of them, but my goodness, there's some amazing insight. It's a great community of investors out there watching these YouTube videos. Thank you so much. And to those who aren't subscribed, now's a great chance. Like, subscribe, and leave a comment. Again, I read them all, and I do kind of like think and ponder about what you actually have to say. And sometimes whether I like it or not, it does influence kind of like, you know, some of my investing strategies and just kind of, am I on the right track? And just, you make me a better investor. And so I'm hoping that these videos do the same for you. So thank you. That's basically all I want to say there. So where am I putting my money in the next few weeks? I need to kind of get back into my VDY strategy, where I've deferred ever so slightly, putting some money into some individual stocks because they were fluctuating. I've been trying to keep them in a even distribution, where just, again, I really feel like a well-diversified portfolio is the best way to go. So some were kind of getting out of this 6% range that I want to keep them into. Of course, that 6% will go down to 5% as I grow the bigger pie of VDY. And that's Vanguard's high interest dividend yield Canadian ETF. So I'm putting more money into that one just to, it's already diversified. And it's already kind of part of that dividend yield, high dividend yield strategy that I'm employing. So it's almost, okay, this makes more sense to kind of put some more money into this. There is a management expense ratio that you do pay when you're using these ETFs. So that's something to consider. You know, do you buy these stocks individually, skip the MER, and you know, keep more money for yourself? But there's, again, something to be said for just kind of the convenience of picking kind of one position, just putting your own money in that, and doing a little bit less research and not have to worrying about like when one stock does better than the other. So again, we're all different and we all have different strategies and different ways that we want to look at this, and that's just the way I've been looking at it. So I need to kind of start going back into that strategy. I'm doing this little thing right now where I'm looking at my spreadsheet, which I'll show you right here. I'm trying to get the annual dividends I receive to be over 100. So at one point in the last 30 days, I put some additional money into Bell Canada to basically pump that up, so that way I'm getting $100 of dividends from Bell Canada. And so I'm looking at some of these. So Interject Renewables is one that I've been putting a little more money into, trying to get that one back up. Well, not get back up, get it up to closer to that $100 mark. So there's other ones like Pizza. That is one where I'm going to put some additional money into this week. When my $150 goes in, it goes in on every Wednesday. So every Wednesday I'm putting money into the market. So this Wednesday I'm going to put some money into Pizza to get that, to get it to be $100 even. So with any money left over from the $150 I put in from buying some Pizza stocks, I am contemplating again putting into Corus Entertainment. Even though I said at the beginning of this video, I'm really hesitant there. What I've done in the past with Diversified Opportunity Corp was I used that as my change jar, if you will. You know, so anytime I had kind of spark beer change, I would put it into that stock. So buying 1, 2 at a time, because it was a very low stock and it's actually done some nice recovery since March 2020. So good recovery there on Diversified Opportunity Corp. So, which then really paid off because I bought a lot of those stocks really low, 1 and 2 stocks at a time, which great plugin for simple trade, you know, zero commission platform when you're buying individual Canadian stocks. Great for that, you know, because you pay 0 commission. So I can buy these 1 and 2 individual stocks at no cost, which I love because I don't like paying any fees whatsoever. I might start using Corus Entertainment as now my new spare change jar, because it's dropped down to, like, again, $1.60. So if I have some money left over, just put it into Corus Entertainment just average down the cost. Nothing major, nothing significant. You know, just buying 1 or 2 shares is not going to reduce my average buying price by a lot, but a lot over a long period of time can make a significant difference. So that is probably what I'm going to do. And then the following week, get back onto the VDY bandwagon and just put a lot more money into that ETF and then just grow that position. That is my plan. So now you've seen kind of where things were the last 2 weeks, and now you kind of understand where I'm going for the next 2 weeks. So let me know in the comments what your plan is for this time right now. Let's hope everything stays cool and we can all keep it in the green. And so until next time, guys, I hope you enjoyed this video, and I will see you in the next one. Like, subscribe. Thanks so much, and we'll talk to you later. Bye.